Welcome to MarketBeat. It's a Monday where almost the entire market is down today. So when you see a stock that's only down about 1%, that's actually pretty good news in this kind of market. Here to talk about Texas Roadhouse and why this stock is doing so well right now is our MarketBeat analyst, Jea Yu. Jay, what about Texas Roadhouse has the stock performing fairly well, especially compared to other restaurants?
Oh, Texas Roadhouse is one of those very rare situations where they are not only growing same-store sales or comparable sales, uh, year-over-year comparable sales, but they're literally doing more than double the segment average. They just reported their numbers, and they're doing 9.3% year-over-year same-store sales, which is incredible. Um, it's literally double uh, Longhorn Steakhouse, more than double actually. They did 4% year over year same store sales. So management is really doing an amazing job with this company.
Yeah, when it comes to the restaurant sector overall, there's been a lot of talk about recession. Consumer confidence in their spending is down a little bit, which obviously makes restaurants take a hit across the country. So, how is Texas Roadhouse? What are they specifically doing that's getting them above other competitors like Longhorn or other steakhouses that might be seeing a drop in spending right now?
Right. So Michael Porter created this theory called the theory of competitive advantage. And what he said was that there's only two ways to have a competitive advantage. One is a premium, highly premium, customized, expensive route to go, like a Ferrari or Porsche, and then the other is a low cost distribution method where you just sell stuff cheap, like a Costco or a Walmart. Texas Roadhouse is one of those situations where they have premium products. They make their sides from scratch every day. The meat's never frozen. When you walk into one of their restaurants, you can actually pick the meat from the window. So it's premium quality food, and it's served at a low cost discount strategy price. So it's a melding of the two. Something like a fine dining restaurant in the surroundings of like your casual restaurant um, at a cheap price. So you truly get quality and value together. I know it sounds cliche, but they're actually doing it, and the numbers show.
Yeah, I think it's all about those buns, right? The Texas Roadhouse buns and that cinnamon butter is why people go to that restaurant. Do you think it's details like that that are really putting this company above the rest?
Absolutely. Bake fresh every 5 minutes.
So let's go back to the stock. What is Texas Roadhouse trading at today on a day when the whole market has really kind of crashed?
Right. So Texas Roadhouse actually bounced off its lows. It fell to a low of 157.56, uh, and it's bounced over 6 points from the lows. Uh, because Texas Roadhouse is so unique and they're cut above the rest, the smart money knows when you get a discount opportunity, when everyone is selling and panicking, that's when you actually want to buy the dip. So this is a good opportunity to get in on Texas Roadhouse. It has a rare pattern called a bullish megaphone, where it's going to make larger ranges, higher highs and lower lows. And then eventually, if the pattern plays out, it's going to explode to the upside.
Yeah, and I think what also stands out about Texas Roadhouse doing well right now is not every restaurant industry or stock is doing well right now. What's happening kind of in that whole restaurant sector right now?
Yeah, basically, uh, consumers are feeling the pinch, and that's the bottom line. They're feeling the pinch. They are pulling back on their spending, and restaurants are a discretionary item. So if your disposable income, if your buying power uh, shrinks, you're going to be eating out less. Uh, and once again, there are those exceptions, like a Texas Roadhouse, where even if you're feeling pinched, it's priced at a value, but it's a premium product. So when you have that rare combination of the two, it's going to keep you floating a lot higher than the competitors.